Mark Selby. How are you, sir?
Very good, Mr. Matthew Gordon.
Now, I hear you've been dallying with the other side. You've been at a lithium conference. What were you doing there?
Yes, was in Las Vegas last week at the Fast Markets Lithium and Battery Materials Conference. Was on a nickel cobalt panel. But the big thing is there globally, that's one of the best battery materials conference. You literally have the entire battery supply chain there. We took the opportunity to catch up with about half a dozen different car companies. You've got all the battery companies there, all the way, down through into the raw materials. So it's a great space to see lots of people from across the industry. And again, very, very efficient use of time for us at about a dozen good meetings on the first day of the conference, which is great.
Now, I think these conferences are bigger windows into the mood of the industry as a whole. Right?
Yeah.
Because I think the markets, it's sentiment, it's momentum, it's mood, it's misinformation, it's lots of things which kind of affect people's behavior. You've got people talking a game of being, contrarian, but in reality they're not, and people are just waiting for the bottom or whatever it is that they're waiting for.
Yeah.
Industry must keep moving. It's invested hundreds of millions of dollars into this space, if not billions. It needs to kind of keep moving. So in terms of what are kind of the big messages that came out of the conference?
Now the one thing that was odd about this conference was a bunch of the sessions, there were sessions in some rooms that were sort of live, but there were other sessions that sort of happened in the same meeting space, and you had headphones on. So it was like a silent dance party, except it was a silent lithium party.
Disco. Nice.
There you go. It was, yes. So, because normally, again, you're in meetings a lot of the time, so you just kind of catch things as go by. So it wasn't as easy to do that. I think, not what I heard was kind of not as dismal as kind of, the rollover in prices would suggest. I think, again, there's a number of articles coming out. I think some of that optimism might be a little misplaced. The thing with lithium is, there really is not a physical shortage of it. It's geologically relatively abundant. It's just a delay in all of that lithium actually making it to market. And, we're now, X years into the lithium story, some of that capacity is really starting to go. So, I think Eramet and Tsingshan have their big lithium project in Argentina this week. I think there are 2 other Argentinian projects going to be ramping up in the next little while here. So, again, if you've got a great asset in the right part of the cost curve, right political jurisdiction, all good. If you're going to be floating out the cost curve, and not in such a great space, and you're relying on, lithium prices that existed 24 months ago, we'll see what happens. We'll see what happens going forward. So,
yeah. And I guess with, certainly with the lithium component, because it's a relatively small space, it's a relatively new space. In many ways, I'm talking about things like direct lithium extraction. For us, it's obviously hard rock and brine, which has been around a while. And people are trying. Well, I guess first mover advantage is going to be a really, really big deal there. And I think, I remember 5 years ago, being slightly concerned that actually the big boys just need to turn the tap on and the market's flooded. But I don't think that's the case anymore. I guess that's the good news. And even the cobalt guys were out in full force, were they?
There weren't. There aren't that many pure cobalt guys out there, but they literally have most of the battery materials there: graphite, manganese. Okay. They're all there. I think to me this sort of a little bit hopeful optimism from some of the guys reminds me of Nickelback. Again, this whole setup in lithium is very analogous to Nickelback in 2005 through 7. We had a massive squeeze, not because we didn't have enough nickel projects. There were a bunch of nickel projects at feasibility study stage. No one had pressed the button on building any of them. Then they got built. Then we came up with nickel pig iron, and I would argue that almost some of that lepidolite in China is analogous to not cheap, but you can turn the switch on and make lots of it. In China is the equivalent of that. And, I made a huge amount of money shorting Nickelback in 2007 because, after we came off $50,000 and fell back down to 40, people were like, oh, okay, it's going to be okay. And you can't really use this nickel pig iron to make all the nickel, and which was completely false. And the nickel price tumbled all the way down to $9,000 a ton a couple years later. So, again, when you have a cost curve and you have a price, there's only two things that can happen: is the cost curve comes up to meet the price, or the price comes down to meet the cost curve. And there's lots of I won't name names, but there was one company put out some sort of pre-feasibility study, and their cost was $6,000 a ton, and they're using $30,000 a ton for lithium hydroxide going forward. And I think today's lithium hydroxide price is like $13,000 a ton. So, yeah. Tread carefully if you're got with your lithium stocks these days. It would be the note.
Yeah, well, and not just lithium, but I think we've seen the same elsewhere in lots of metals. So beware. Okay, let's get on to we'll talk about all things lithium though, because I think that's where people are here to listen to. Price, we kind of got last time we spoke, lithium was nickel was doing some extraordinary things. How's it faring these days?
Yeah, so come back up, starting to retrace the retracement. So back up into the $17,500 range. So again, just under $8 a pound for those of you who are in pounds. Again, we're about $2,000 a ton off the bottom, which is generally where I had expected we'd be. Building through the year back up to $20,000 a ton. So that spike that happened earlier in the year was, my view, a little premature. But things are continuing to head in the right direction. Again, the bears would point to right now that LME inventories, quote, at a 2-year high. The key thing there is we've gone all the way up to 93,000 tons of inventory. Nickel's now at we'll end up this year at a 3.4 to 3.5 million ton market. So not a lot of inventory, and Shanghai inventories are up about $20,000, up to about 22,000 tons. Combined, that's about 80,000 tons of nickel versus where we were when inventories bottomed last summer. That may sound like a lot, but again, that's just a couple weeks worth of inventory. And particularly in context, we had analysts talking about 250,000 ton surpluses, which are sizable surpluses. And again, I've been challenging that view. And as we talked about earlier, turns out, China was undercounting demand. And I had a surplus last year of, just over, in and around 100,000 tons. So if that kind of 80,000 ton increase is in line with, surpluses that are closer to 100,000 tons. And again, I think going forward, we're in great shape. As the nickel study group talked about the market being balanced in April. We've got year-to-date nickel demand up 8% already. And, I think we'll see some acceleration through the back half of the year going forward.
Right. And so just again, remind, because I'm conscious that there's new people listening in every week as the numbers keep growing. Some of the drivers for these either depletion or adding of the inventory levels, is it primarily China, or is there a bit more to it?
No, we've seen big increases in supply, from China and Indonesia, as well as big growth in demand. And over the past year, part of the delay in having some of the surplus materialize was you need to have a certain purity and be a registered brand on the London Metals Exchange to be able to deliver inventory. So we've had several refineries now built and register those brands on the LME. So I think we had 5,000 tons pop in over the past 2 weeks. There was another brand that got registered in the past month. I think that's part of that inventory coming to market. And again, we may see another 30, 40, 50,000 tons sort of come out of the woodwork. And to me, that would still be consistent with, with the kind of market dynamics that we've seen earlier. And again, a fraction consistent with surpluses that are a fraction of what some of the quote analyst experts were talking about.
Right. And obviously, so where's the confidence come from you with regards to this 20,000 end of year number?
So fundamentally, one, demand. So with the nervousness in the EV market right now, we've got a whole pile of automobiles rejigging plans as demands have shifted a little bit to hybrid. Again, still expect to see double-digit demand growth by year, and we've got some year-over-year comparison challenges with a couple of the markets. And stainless production growth last year was good globally, and expect to see it again good this year. So fully still expect to see double-digit demand growth. And then on the supply side, yes, we are seeing lots of capacity come from Indonesia. But the reality is Indonesians do not want low nickel prices. That's not the way they generate the most money for their economy. And so, to date, they've done a good job, managing ore mining licenses. And so, that's helped limit the amount of supply growth that's coming. We've seen stories earlier in the year about, Indonesian smelters having to import, Philippines ore. And some of the conversations I had during the past week, with various industry players, talk about the drop in ore grades in Indonesia as being a real challenge. So, it's something that I think most analysts are underestimating, the impact of what that's going to look like supply-wise. And so, so that's why I'm very confident that we should be back up to that 20,000 level by year end.
Right. Okay. And we talk about, and I think we talked about it in the past a little bit, but two recent incidences which are going to affect potentially stainless steel prices.
Yeah. So one thing that's always important is to look at some of the adjacent markets and the cost curve, right? And the shape of the cost curve. Again, to contrast nickel versus lithium is, yes, there is, we've got a lot of supply coming online from Indonesia, not much elsewhere, but a lot of that supply, a lot of the global supply chain is pretty close to where current prices are. So, there's that cost curve support that, whereas lithium prices are still, well above a big chunk of the cost curve. And so that's one of the key differences. So for nickel pig iron producers and matte producers in Indonesia and in China, after buying the ore, the next most important cost is the cost of the met coal and or the coke that are used to produce those products. So we had a mine explosion in Eastern Australia, another one in the United States, and that's taken a chunk of capacity offline of the met coal market. So we've seen a big jump up in met coal prices just in the past week, and so that should start to ripple through the supply chain and costs, for the NPI industry. And so again, that should lead to further price support in this range and really sort of anchor a floor at these kind of price levels.
Explosions caused by what? What are they getting wrong?
Methane gas and met coal. I mean, that's when you have coal has always been dangerous when there's mines, and there's some mines that are more dangerous than others. And unfortunately, two mines that have a bit of a track record with some issues in the past, have yet again, caused some real issues. So, always tough to see those kinds of safety incidents happen.
Yeah, for sure. Well, we talked about it last time out in Indonesia, and was it blood nickel we came up with?
Yes.
Good phrase. No one likes that. So basically, guys, sort it out. We don't need to provide ammunition to those who don't want to see natural resources being extracted. Right. Let's bounce off to Western Mines Group.
Yeah.
Little announcement there.
So last time we spoke, they had halted the stock. I'm curious to see. So Western Mines Group has a project east of Kalgoorlie, which is in Western Australia, in nickel region. They've got an interesting big bulk tonnage deposit like Crawford, like Dakar with FPX. And so they've been drilling it off and looks fairly sizable. And what was interesting is they've been hitting some higher grade material at some of the contacts. So I was thinking it might be another big high grade interval, but in this case it wasn't. They got $1.5 million investment from Dundee Corp. It's a Canadian merchant investor. They've invested in several nickel stories. So good to see them getting involved with the story here. And then subsequent to that, put out another set of assays from one of the holes, 600 meters, continuously mineralized. Again, that's the nature of these big bulk tonnage deposits, and not too dissimilar from Crawford and some of the other targets we're drilling. You get intervals of 0.3, 0.4, 0.5. They had 1.5% nickel sample. 1 meter. That's not going to change the story at all, but it's intriguing that this deposit, there are places where the nickel content gets upgraded. So one to keep an eye on going forward. So it was good to see them continuing to advance that project.
Okay, interesting. Just in terms of let's have a little bit of Canada nickel action.
Early last week, yeah. So we announced a bridge facility from Moramet for $15 million US. This is now the fourth time that we've done that with them. Again, what we've done is utilize those bridge facilities, to a financing event. In our cases, one of those was Anglo American, another one was Samsung and Agnico. And so, right now we are targeting having our financing package for Crawford in place by year end. And so this money allows us to keep advancing the permitting and the initial engineering that's done, that we need to do to be able to keep Crawford on track, that when we receive permits mid next year, we'll be in a position where we can make a construction decision. So again, they've been a long-time financing partner, for me and several companies. And again, good to continue to work with them in a way that's generally non-dilutive financing for us.
Right. And I guess what I'm going to read between the lines a bit here. This will be a fourth one with Matt. They're obviously comfortable with your ability to do what you say you're going to do within reason, within the time frame that you're suggesting. So they must have a strong belief that you will actually do what you're going to say this time.
Yes, for sure. Yeah. They don't,
right.
Generally you don't bridge into a time frame unless there's some degree of confidence that you got to be able to take the bridge out in that time frame. So
yeah, they don't want to lose their money, and you don't want to pay expensive charges of money, right? The refinancing charges, which are a little bit punitive. So okay, well, that reading between the lines sounds good. Magna Mining.
Yeah,
so on here, doing okay?
Yeah, so we had a couple of the regular guys who've been advancing projects. So Magna, what they're getting ready to do, the announcement that they're going to do a surface bulk sample that they're going to ship to the Glencore smelter in Sudbury. So they've been doing some infill drilling to get exactly where they're going to pull that sample from nailed down. And again, good results. The first set of results, I think, were from parts of that sample that'll have higher nickel and copper grades. This one is going to have higher PGM grades. So, nice intervals anywhere from 5 to 20 grams PGMs, but with low copper nickel grades that are consistent with that type of mineralization in the basin. So again, good to see that project continue to move forward. And then premium nickel, which is drilling down in Botswana, put out another set of assay results from 10 more holes. They've been continuing to get 1.5% nickel, 1.5% copper over some decent widths. So they're targeting in their words, a resource that will be coming out in the quote coming weeks. And so we'll be keeping an eye on that. There's an old past producing mine that had a historic resource. So we'll see what kind of expansion they can get. They just completed a $27 million raise. So they're well financed to get through the next phases of work that's there.
And SPC.
Yeah, SPC. We mentioned them before. Again, good exploration team. Put out a resource about a month ago on their West Graham, which is a surface open pit in Sudbury, which could ship to either smelter. I'm not sure the terms of the agreement because they acquired part of the property from Vale, but did a good job moving that deposit forward. About a year ago, they picked up a deposit called the Muskox intrusion up in Nunavut, which is in northern Canada. This was a large intrusion that was explored back in the 1960s and 70s. Generally Inco put the finger on most of anything that had nickel back in the 1960s, and this was no exception. I think the thing that's here that's interesting, one, that intrusion did yield some pretty splashy grades, around the edges of it. I don't think they found anything particularly large enough, but the one thing I just wanted to use this as a highlight is this is a deposit that hasn't really been explored, to what the company said with modern EM techniques that allow you to see deeper. That team was part of the Sudbury team at Falconbridge about 20-ish years ago that discovered what became the mine in the east end of the Sudbury Basin, Nickel Rim South. And so these are guys who are quite skilled at using EM techniques. So we'll see what happens here. The key lesson here is, again, when somebody recycles a property, it's important that there's a new technological innovation since that. Either they're more competent, the prior team, or there's been some technological innovation that will yield new insights into what that deposit has. And so this deposit has been, sitting around for effectively, 50, 60 years. So it'll be good to see, what kind of things they can pop out. So again, just want to put it in your watch list over the coming months. Probably you won't see any assay results out till August, September, but just something to keep an eye on going forward.
Brilliant. Well, there we go. We need all of the above. We need everyone to work.
Yep.
Hopefully someone will get over the line. Well, great little run through the world of nickel. I would say the last few weeks probably make people a little bit nervous about the kind of erratic nature and behavior, but you're saying it's kind of normal. You kind of called it. But your expectation is end of this year, it's all good.
All good.
All good. Let's see. Let's see if that is all good. Okay. Ciao, ciao.
All right. Thanks, Matt.